Most homeowners assume that when they apply for home insurance, the insurer's assessment starts with what they provide. In practice, the insurer may already have access to information about your property and your claims history before that conversation begins. I've spent nearly a decade working inside the Canadian insurance industry. In this video, I'm going to explain what data sources an insurer may access when evaluating your application or renewal, what that information tells them, and what you can do to understand your own profile before the next quote. When a homeowner applies for coverage or receives a renewal, the insurer is not working only from what the homeowner tells them. Several data sources may be consulted as part of the underwriting process. Understanding what those sources are and what they contain changes how you approach a renewal conversation. The first source, claims history. Shared industry databases allow insurers to access claims history associated with a property and with a homeowner across multiple insurers. When you apply for new coverage, the new insurer may see claims that were filed against previous policies, including claims on the property before you owned it, depending on how the data is structured and accessed. This matters for two reasons. First, prior claims on a property may attract more scrutiny in the underwriting process, depending on the insurer and how the data is structured. Whether prior owner claims follow a property versus a policyholder varies by insurer and data system. Second, your own claims history from previous policies follows you from insurer to insurer. A video in this series covers that in more detail. The link is in the description. The second source is credit-based information. In some provinces, credit-based information or insurance scores may be used as one factor in home insurance pricing, depending on the insurer and applicable rules. This is not the same as a credit check for lending purposes. It does not affect your credit score. In other provinces, the practice may be restricted or prohibited. Because the rules vary, ask your broker what applies in your province and whether your insurer uses credit-based information. In markets where it is permitted and used, a homeowner who is unaware that credit history may be a factor may not understand why two insurers offer different prices for the same property and coverage. The third source, property condition information. An insurer may rely on its own prior inspection notes, a new inspection, broker submitted details, photos, third-party property data, or information gathered during the application process. The point is that property condition information is not limited to what you describe in your application. An insurer may gather or access additional detail through its own review process. The fourth source, geographic and postal code risk data. Insurers maintain proprietary risk models that assign risk characteristics to specific geographic areas. Your postal code is one of the inputs into your premium. Areas with higher historical claims frequency for water damage, theft, or weather events may carry higher base rates regardless of your individual claims history. This is why two homeowners in different neighborhoods with identical properties, identical claims histories, and identical coverage can pay meaningfully different premiums. The geographic risk assigned to their postal codes differs. Geographic risk data also reflects how insurers think about exposure concentration. An insurer with a large number of policies in a specific area may be more cautious about adding coverage in that area, not because of anything specific to your property, but because of how concentrated their overall risk exposure is in that postal code or region. This is one reason why two identical homes in different areas can receive very different responses from the same insurer. It is also worth understanding that geographic risk is not static. As climate patterns shift and lost data accumulates, insurers update their models. An area that was considered standard risk 5 years ago may be assessed differently today if the local claims experience has changed. This is part of why the home insurance market has become harder to navigate for homeowners in certain areas. The underlying risk models are changing faster than most homeowners realize. Understanding that geographic factors affect your premium independently of your personal history helps explain something many homeowners find confusing: why a renewal increase arrived even though nothing about their property or claims record changed. The answer is often in the risk model, not in the policyholder file. The fifth source: public or municipal records. Building permit records may be publicly searchable or obtainable through municipal records, depending on the municipality. If renovations are disclosed, an insurer may ask whether permits were required and whether they were obtained. Unpermitted work can raise questions at the underwriting stage or at claim time. Here is the reframe. This is not about insurers having access to information they should not have. Most of these data sources exist to help insurers price risk more accurately for each individual property and policyholder. The homeowner who understands what those sources are is in a better position than one who does not, because that homeowner can take steps to understand their own profile before the next quote conversation. The information asymmetry is not permanent. Much of what an insurer can access, you can also access or understand with a few direct questions. The homeowner who goes into a renewal conversation knowing what their claims record shows, whether geographic risk factors are affecting their area, and whether any property changes are on file, is in a fundamentally different position than one who accepts the renewal number without context. The questions in the next section are designed to close that gap. 3 things worth knowing before your next quote or renewal. First, you can request your own consumer hits report. This report shows personal property claims information for properties insured by you. It may not show claims from periods when the property was insured by someone else, so if you are concerned about older property claims, ask your broker what information the insurer is using and how to clarify it. Second, ask your broker whether credit information is used in your province and by your current insurer. If it is permitted and used, understanding that credit history is a factor allows you to ask whether your credit profile is affecting your current pricing and whether improvements to your credit position could affect future quotes. If your province restricts credit-based scoring, knowing that means you should focus on other factors. Third, if you have done renovations, confirm that permits were pulled for any work that required them. If work was done that required permits, confirming those permits are in order before your next renewal or application reduces the risk of questions arising during the underwriting process or at claim time. When you apply for home insurance or accept a renewal, the insurer is working from a picture of your property and your history that may be more complete than what you provided in the application. Understanding what that picture contains gives you the ability to have a more informed conversation and to catch anything that may be inaccurate or incomplete before it affects your coverage or your price. The free homeowner checklist is in the description. It covers the underwriting factors and renewal questions worth reviewing before every policy decision. If you found this useful, subscribe. I publish regular Canadian insurance breakdowns for homeowners. Everything I cover comes from nearly a decade working inside the Canadian insurance industry. See you next week.